So let's start at the beginning. I know we had Brad on last week and found out that he didn't have any experience before he came to FFL. So tell us a little bit about what you were doing before Family First and how you landed here.
Okay, great question, Wayne. I actually was with another IMO, started back in about 2014, but my career actually started back in 1983. I started as a licensed accountant, as a CPA, and spent a lot of time doing taxes, and taxes is pretty straightforward. You either owe money or you don't, and you need someone who knows how to do some planning for you. Now, combined with that was a family construction company that goes back about 9 generations in my family. So I was kind of
Wow.
CFO for them, dealing with all their insurances, whether it be the life insurance, the key man insurance, the retirement plans, the medical insurance. I was the guy that did all of the vetting and all of that. So I had all of that, and I looked at it and I said, you know what? That stuff's just a lot more fun, especially the retirement side. So when 2008 hit, and I had to look at my dad and my brother and my granddad and say, you know what? I know that we've been doing 40 million a year and producing volume as a construction company, but those days are gone, and I don't want you to put your money back in. It's time to shut it down. I needed to do something. So I literally jumped into this full steam ahead, focused on the retirement side, and just started working on how can I work a system that allows us to be just as relaxed talking about somebody's hard-earned savings as it is talking to somebody about a life insurance policy. And over that 10 or 12 years, I've kind of got it to where I've got the T chart, and we can talk the comparisons, and we can actually work it through. But how I got specifically to FFL, because I've only been here, haven't even been here 2 years yet, to be honest. July will
Right.
be 2 years. And there's a young lady who is no longer in the business. She was with me on a different team at my old IMO. She had jumped ship, but I prepared her taxes, and she walked in 2 years ago. And I said, where are you? What's going on? She said, you just got to come check this out. And I went to the Riverside, California Spring Sales Conference in 2019, spent 5 minutes listening to Sean, 5 minutes listening to Paul McLean, 5 minutes listening to Andrew Taylor. And my wife and I said, we're home. And that was it right there. We walked out of there, we signed up, we gave our notice, we were gone. The old IMO wouldn't sign anything for 90 days, so I couldn't submit business for 3 months. But once I started submitting, it was just about let's embrace the system and let's go out and build and let's protect families and do all the things that we do. And I'm knocking on wood, but I've just been fortunate enough to be able to jump into a system that everybody on this call has had that same benefit. So you just get out there and protect people, and you get to make a lot of money along the way, which is fantastic.
Yeah. So a lot of people on this call have never sold an annuity or have very limited exposure to annuities. And you came in focused on protecting people's hard-earned retirement assets. Obviously, you didn't come in with the book of business. So how do you get to the money so effectively when you're in the house? And some people probably think that you're running some sort of magic leads. So what's your lead makeup, and how do you transition that into what your annuity volume is? Because it's impressive to put it plainly.
Great question, Wayne. So let's clarify a little bit. I did come in with a book of business because after spending 30 years doing accounting and taxes, every one of those people have stayed with me. They've never walked away. So I do have a
Okay.
lot of referrals, but that only makes up about 50% roughly, plus or minus, of my volume. The rest of it is running all the same leads that everybody else does. The key is, like you mentioned before, it's that T account. And when you're collecting that financial inventory and you ask the golden question, which you hear it on the AMS call on Thursdays, and you hear it from every agent that runs, what do you have that acts like life insurance? For example, a 401k or an IRA or a Roth IRA. And somebody's going to give me an answer. So if, Wayne, I'm asking you that and you actually tell me, you know what, I've got this old 401k from an employer that I haven't been with for a few years, I'm going to ask you how much is there. Is it 20,000? Is it 400,000? How much have you saved, Wayne? And you're going to give me a number. Now, I'm going to be honest. I honestly don't care what the number is. I want to know what you have because I want to try and protect it better than where you're at. So I just need to know where you are. The important thing from that is this. About 3 years ago, the federal government did a study. And in that study, they determined that the average American individual, when they reach retirement age of 65, has less than $30,000 saved to retire. Now, what that means is everybody has to work longer than the age of 65 unless they're here at FFL and they want to actually retire on time. So when Wayne or whoever's in Wayne's shoes says, you know what, I've got 20,000 or some number less than 30, I bring up the study and say, you know what, you're a little behind the curve. We should probably talk about that sometime. And then I move right back into my lead and I try and go out there and close the additional insurance. If you've got more than 30,000 saved, I flip that script and I simply edify what you've done because you've beaten the odds. So Wayne, you told me you got $100,000 in your old 401k. I don't know if you read the study a few years back, but the federal government determined that the average American only has $30,000 saved for retirement. You got more than 3 times that. Congratulations on being a good saver. But I digress, Wayne. Let's get back into this appointment and try and get your house protected. And I go right back into my lead. I resolve the lead either by writing business, confirming they're in a good place, or not being able to get them coverage. And then I pivot right back. Hey, Wayne, a few minutes ago, we talked about that $100,000 from that old 401k. Where did you tell me that that was? Now, I never asked you where it is, but I'm going to act like I did and forgot to write it down. You're going to tell me it's at Fidelity, or it's in the bank, or it's at some financial institution somewhere. And that's going to instantly tell me a couple of things. If it's at the bank, you don't really have any risk of loss unless the bank folds. If it's anywhere else, you run the risk of losing money because you're subject to market volatility. Now you can get right into that T account, which I'm sure you're going to share with your team. And the T account simply covers 4 points. Point number 1, are you in the market or not? Because I want to know if you are at risk of loss. So Wayne, you're at Fidelity, and I'm not picking on Fidelity, I'm just picking Fidelity because everybody knows who Fidelity is. So your 100,000 is in an account at Fidelity. You understand that when the market goes up, you're going to make money. But what happens when the market goes down, Wayne? And you're going to answer, I'm going to lose money. And I'm going to agree with you. You're right. And the problem is Fidelity is what we call a securities firm. Securities firms make their money by putting you at risk of loss and trying not to have you lose, but they don't control the market. So unless you're on complete speed dial where you're the first person that your rep is going to answer their phone call, it may be hard to protect your loss and minimize it. So what we do, Wayne, is we deal with what's called a fixed index annuity, otherwise known as a safe money retirement plan, where we have the ability, if it's a good fit, notice the hedge there, because I don't know if I can actually help anybody until I run numbers. So I want to kind of sell them on, we can look at it, sell that on, we might be able to help them, and sell that on, they want to be afraid of not saying, yes, I want to know if you can do better. So I'm not sure if I can help you, but if I can, and I can protect you against loss, but still allow you to make money, would you be interested in seeing something? It's a very non-invasive question, but it's designed to get Wayne to say yes. The next thing I'll talk about are fees. Wayne, a securities firm is going to charge you fees. Some of them are disclosed, some of them are not. They're charged by the mutual fund and they report earnings after the fee. So you're going to spend somewhere between 1% and 4%. When I review your statement, again, I'm being presumptive that I'm going to get a statement. But when I review the statement, I'll be able to identify exactly what you're paying in fees. But by comparison, Wayne, our safe money retirement system is designed to reduce, if not completely eliminate, your fees. So if I can protect you against losses and reduce what it costs you to make money, I'm guessing you would be doubly interested in seeing if we can help. Would that be correct? And I'm going to get another yes. Then you're going to talk about things like legacy planning. You're going to talk about things like whether or not Wayne or whoever's in Wayne's chair needs income from this account when he decides to stop working. Now, because you've resolved the lead, I already know Wayne's age. Wayne's is 47. Wayne's probably going to work another 18 to 20 years. So all I'm going to do is confirm, Wayne, are you trying to plan to retire at 65, or do you think you're going to want to work a little bit longer? The reason you want to know that is so you know how long you have until you turn on an income rider, so you can give them the best possible scenario when you run the illustration to compare where they're at against an FIA. Now, at the end of that conversation, which honestly is only about 5 or 6 minutes, 90% likelihood, everything that we can do that the Fidelities cannot, I'm simply going to point that out and say, hey, Wayne, it looks like you're interested in seeing if we can better protect this for you. Why don't you go grab a statement for me so I can take it with me? I've got 10 more appointments today, so I don't have time to look at it now, but let's set a follow-up appointment for 2 or 3 days from now or next week at the same time. I'll get my calendar out while you're grabbing the statement. There's 2 things that are important out of there. Number 1, I want the original statement. Why would I want the original statement? Why do you think I would ask for that, Wayne?
It's a kind of an edification that shows how much they trust you with the information, and it also gives you, like you said earlier, some insight into the makeup of the account, so you can essentially find more leveraging points while you're
That's all
analyzing.
correct. But the one thing you didn't mention, which I'm going to put out there, is even if they go online and print out a statement, which they can always do, when a client hands you a piece of paper that has their proprietary information on it, they're going to let you back in the house for the BAM fam because they want that piece of paper back. I can take and make a photocopy of it, which I'm going to do. But by getting them to give you a statement, it virtually guarantees that they're going to let you back in the door to close when you go back. So in addition to everything that Wayne said, that is also an important reason. And then while they're doing that, you now just pull out your calendar, you set that follow-up appointment. You guys got Ivan, you got Wayne, you got a lot of home run hitters here, and there's plenty of people at AMS that do a great job. And then there's people like me and the other Mr. Allen and plenty of others that you can always reach out to if Ivan or Wayne are not available, and we're happy to guide you in the right direction. But the fun part of it is you've got the ability to protect your client in an upsell type of opportunity, because you're asking that question off of any type of lead flow you buy. So relative to leads, I'm buying all the leads. I buy the instant internet, I buy the 1-month-old, I buy the 3-month-old. I do buy a few annuity specific leads, but honestly, I don't buy very many of them, maybe 10 a month, because so many people have something saved or need to do something that when you're in the home on all your normal lead appointments and you simply just run the system, you're going to create those opportunities for you. And you're going to have that opportunity to go out and protect their funds. And then when you close, now you just simply ask for referrals. Now, I don't know how you do it, Wayne, and I'm going to love to hear that in a moment. My way of asking for referrals is very simple. Wayne, you understand the lifeline of my business is talking to people and helping them protect what they have, either through insurance or through safe money retirement. I'm sure, Wayne, since I've done a good job for you because you wanted to move forward with these policies, that you might know 2 or 3 people that would benefit from a conversation with me. Now, just like when I first met you, Wayne, I don't know if I can help them until I have that conversation, but I guarantee you this: if I can help them, I will. If I can't, and I know someone else who can do it better, I will refer them. But if they're in a good place, I'm going to tell them the same thing I would tell you, which is stay where you're at, because you can't do anything better than what you're already doing. Here's my card. If you have any questions, give me a call. And I ask for the referrals. And then I literally, let's say Wayne wants to refer Ivan. What I will do with Wayne at that point in time is I'll ask Wayne to send a 3-party text messages so that he texts Ivan and me at the same time and puts forth that introduction. Hey, Ivan, this is Wayne. I've got my new financial advisor on the phone. His name is David Allen. And he just helped me protect some money in ways that I thought was just amazing. And I thought it might be good for you guys to connect. Ivan meet David, David meet Ivan. I'm going to respond to that text thread, and I'm simply going to say, hey, Ivan, it's a pleasure to meet you. When's a good time for us to connect privately so that I can respect your information? And then I'm going to take it to a private phone call between me and Ivan so that Ivan doesn't feel like he's saying something in front of Wayne that he might not want Wayne to know. That's what I do. That's my lead source. That's my in-home. And then that's how I set that follow-up appointment.
That's brilliant. I think and you kind of dug into it after I left it out. When you talked about why you get the statement, I was going to ask how you ensure that you get back in the house, because a lot of times I'll book the next meeting and I'll get an email or a text message or a phone call saying, you know what, we don't need to have that meeting. We're not really interested in that. Is the statement the only thing that you do to prevent that? If not, what else do you do, and how often, if ever, does it happen because your process seems so seamless?
The statement is one of the things I do. I would not blame it on the statement. If any agent, not just you, Wayne, because it happens to me also. If you look back at any appointment that you were selling the concept of an annuity and they called you and said they don't need this, you didn't tie it down strong enough on the front end. It's to me, it's the same basic concept of somebody that says no thank you to a mortgage appointment or a final expense or an IUL. If they're not letting you back in, we didn't do something as a professionally licensed agent on the front end on that first appointment to make sure we're going to get in the door. Now, one of the things I will add is I will soft close on the front end once I got the statement so that I know I'm closing when I go back. Because if I get in the door for the close, I will close 98.3% of the time because I run my numbers. So if I walk back in the house for the second, what I've also done on the front end, and I'm going to stick with you as the potential client, Wayne. Okay, Wayne, so we're set up for next Thursday at 12:30 Eastern time. I'm going to come back to your house. I'll bring back your statement to you. I'm going to bring back a scenario or two that I believe would be a good fit for you to better protect your money if it exists. If you like what you see, annuities are no different than life insurance in the company needs to approve you before they're going to move forward. What that means on the safe money retirement side is we're not going to be moving any money next week. We're simply going to fill out paperwork so that the company I come in and represent can do their diligence and say, yes, we like Wayne and we're willing to take him as a client. When that happens, now we'll start working on transferring exactly what you want to transfer. So Wayne, you're talking about $100,000. You may decide only to move 50,000. I'm good with that. You may decide to move the full 100. You may decide on zero. I honestly don't care what the answer is. I just simply want to help if you want the help. But that decision is yours. I'm here simply to show you potentially a better option. Does that make sense, Wayne? Is that fair? And that's my 3 words right there. I use the question, is that fair? Probably a dozen times in every single appointment, because I want that client to know I'm being reasonable, I'm being fair, and I'm asking them to join me on a walk that is for their benefit without them feeling like I'm hard selling anything. So by getting them to confirm that I'm being fair, it's really, really difficult for them to say no to anything down the road because they know I'm being reasonable because they've already confirmed to it. So now when they try to play the other side, I now have an objection I can work through that with. But I do all of that on that front end when I get the statement. And when I go back, 98.3% of the time when I walk in the house, the driver's license is already sitting on the kitchen table. And if it's out, I know I'm writing it out.
Got it. Makes a lot of sense. You said something earlier, and I didn't want to stop you because you were in a rhythm, but when you were referring to the study, you said that you congratulate them on being a good saver. And I've heard other people use that in a different manner to differentiate the difference between a saver and an investor. Do you ever utilize that congratulations on them being a saver to kind of differentiate them or separate them from being in the market by setting them apart from an investor?
Yeah, I may do it a little different than others because we all have our own way of doing it. Somebody that's using after-tax money in the market, net monies after, after they brought home their paycheck, that's an
Yeah,
investor to me, okay? Somebody who has a retirement account, an IRA, a 401k, a 403b, a 457, a SEP, a Roth,
automatically a saver.
automatically a saver. And I'll point that out because it's a retirement account. So you beat the odds, Wayne. You're doing better. You got more than 3 times what the national average is. You've been saving well. And I'm sure you're not interested, Wayne, in losing any of this money since you've already beat the odds. Would that be a fair statement? And I'll get you to agree to that right there. As soon as you would agree to that, I know you're definitively a saver. One of the other things that I'll do at some point in time when they can't decide how much they want to protect, and let's up the odds on this, Wayne. Let's say you got $300,000. You're getting ready to retire and you want to protect it and you say, well, I'm not so sure I need to move it. I'm going to ask you, okay, Wayne, out of the $300,000, if the market went down 10% today and it never came back, are you cool losing 10% of your balance if it's never going to recover? Now, the first thing I did there is I used a percentage because I want them to think 10% isn't too bad. And when they say, yeah, you know what, I can afford to lose 10%, I'll say, okay, perfect. So Wayne, you understand 10% of your 300,000 means you're okay losing $30,000. Are you really okay losing 30,000 or is that too much? And let's say, for example, you say, yes, I'm okay losing 30,000. All right, Wayne. So you're okay losing 30,000. What you're really telling me is you're not okay losing any of the other 270,000. Is that fair? And immediately I know how much money I'm doing an app for because they're going to say, yeah, I don't want to lose any of that. Great. Let's go protect that. And honestly, Wayne, a lot of my clients, what they do is the money they're willing to lose, they leave where it's at right there. The money they're not willing to lose, they'll go ahead and move that over to this company that I'm presenting to you, which right now is Athene. So now they can leave their 30,000 with their bank or with T. Rowe Price or Merrill Lynch or Fidelity or Vanguard or Voya or whomever. But now I know I can go do an app for 270,000 because they have no interest in losing a penny of that. And now I got solid business going in as well. So it's a stronger app and it sticks. So what I can tell you is this, what that has done for me is 99.73% of every annuity I've done has never charged back, has never voided out, has never been reversed, has never had anybody change their mind because I'm only going to move the money they do not want to lose. So I don't care if they've got 30,000 or 30 million. How much are you willing to lose? Okay, keep that where it is. How much are you not willing to lose? Let's go protect it. And they buy into that every time.
Yeah, no, that makes a lot of sense. I was kind of anxious when you asked the 10% question as to how you were going to flip it and where you were going, but that makes all the sense in the world. And I know we kind of glossed over it, but you said you started July of 19. Is it right? How much did you issue in 2019?
I hit Hall
Do
of
you
Fame
remember?
in 5.5 months. So by Christmas of 2019, I done in 2019 about 402,000. 2020, I did 435. And that was with 4 months of literally no issue paid numbers because I had over $4.5 million of annuities fall out in the state of California because they were all part of the state system. They were people getting ready to retire. And when the state shut down, we couldn't get a hold of anybody to move it. So I basically did 435 in 8 months last year. And my goal for this year is to run at least 500,000 on the annuity side in AP and 300 to 500,000 on the life side.
That's a pretty solid year. It's a pretty solid goal too. Um, so we talked about leads. Obviously, your annuity transition and presentation. If you're getting somebody started, obviously, um, because most people like yourself are starting to build a business if they haven't started already. If you're getting somebody started and you want to just make sure that they don't gloss over it and they don't shy away from that question, aside from obviously telling them that they need to ask the golden question in the house, is there something specific that you're arming them with, or preparing them for before they start running appointments or as they get up and running to make sure that they don't miss those opportunities from day one?
What I do, that's a great question, Wayne. What I do is I want to make sure they're as solid as possible on understanding where to buy their leads and how many they need to buy so they can actually get their good life insurance issue paid numbers up so that they
Yep.
stick. Okay. I want them to understand the golden question. And then what I do with most of my brand new agents is when it's time to pivot, I actually coach them on how to call and get a hold of me, and I'll do the pivot for them. So I might look at Jose, and I'll say, okay, Jose, when you ask that golden question, you're just going to say what you just heard, which is edify or let them know they got a little work to do, and then go back and resolve your lead. When it's time for the pivot, all I want Jose to do is look at you, Wayne, and say, hey, Wayne, we spoke a few minutes ago about that $100,000 old 401k. And I happen to know a guy who's at the company who's a specialist in what we call safe money retirement. I want to get him on the phone to talk to you about that because I know you're a good saver because you've beaten the odds. And I'd hate for you to lose any money. This is just going to take a minute. Let me get him on the phone and introduce you guys. And then he'll call me and I'll do my 5 minute and get him set up on a bam bam. And then I'll go out there and close the first 2 or 3 for Jose in person if I'm local enough. I'll do a small split with him so he gets his training on the annuity side much faster than somebody who doesn't have somebody like Ivan or Wayne or myself in their fold. And then they're off and running, because it only takes 2 or 3 appointments. You know enough now to be fairly dangerous and to get statements, and then you can continue the training after that.
Yeah, that's true because a lot of it is in their head. A lot of it is them shying away from the annuity conversation because they build it up to be something that is not, much like they did with the life side when they got started, or the phone, or anything really. And then once they figure it out, after they hear it a couple of times, they figure that it's just a conversation, like you said so many times, about saving and protecting. There's no, and the more you can kind of water it, not necessarily water it down, but translate it into plain English and not talk over their head, the more likely and easier it is to get that money moved, because they
Okay, you guys
understand it.
froze on me there. I don't know if it's me or you.
It's probably me. Am I back? Am I back? Let's see.
I think it was him, Wayne. You're fine.
Yeah, we heard both.
Yeah. Okay.
We heard both.
Okay. Is he still on, or did he drop completely?
Nah, he froze, but he didn't drop completely.
Okay. We'll wait for him to come back live then. Oh yeah, he's still there. Hey, while we're waiting on him to come back, I'm going to here shortly post the sales conferences for the where are we, spring now? For the spring quarter across the country. You may have seen them posted on Facebook, but I'm going to post them in Slack on the training and development channel. Make sure that you identify a city, get to it, and plan around it so that it doesn't interfere with your run schedule. And anybody that's interested in the business that you've talked to about it, it's a great opportunity to get them in front of what I call the heavy lifters and let them do the work for you, because it really does alleviate a lot of the guesswork, a lot of the ambiguity, a lot of the questions that you typically are forced to answer that may not come across as clean because you may have just gotten here, or because you may not be as confident in that conversation. So just get them there, get them in the room, and let the heavy hitters kind of do the work for you, and then let us help you build this out, because there's really nowhere else that they can duplicate this type of success, for lack of a better way to put it, legally, like I always say. without having to look over their shoulder. So, let's see if he's still on.
Yeah, I'm here, Wayne. I lost a couple of minutes there.
Okay.
But
So-
one of the things I could say is this: the more relaxed you can be about what you're doing, the easier this is all going to be. You know, so it's easy just to say, you know what, I'm just here to help. If you don't want the help, that's okay. I can move on.
Yeah, you kind of let them off the hook.
Hmm.
Absolutely. And then some of your takeaways are just, it's so seamless and it's so matter of fact that they're kind of like, well, of course I want the help, or of course I want to protect it, and they don't even realize that you're kind of pulling it away from them so that they pull it closer to the cusp. But it's definitely a recording for the ages, and it's definitely going to go in the repertoire as a part of the packet that I send out as annuity training for agents as they get started. But what I don't like is how you put me on the hook to help them transition more, but I'll figure it out.
Well, you'll be fine with that, Wayne. But you know, annuities is just like the life business.
Yep.
It's all about reps. So if
100%.
you know, yeah, you know, like they talk about 100 appointments to really understand the life insurance side. You've got to be able to walk through the annuity side. You're going to get 10 or 15 or 20 of those, and then it's going to start to feel real comfortable, because at the end of the day, it's no big deal. It's just simply another avenue that we can go help a family, get some referrals, really pump up your AP numbers and help your team and build your business.
Yeah. No, absolutely. I don't know, and I want to be respectful of your time, but if you could hang around for another 5 or 10 minutes to answer a couple of questions.
Absolutely.
I'll just, do you have the time?
Yes, sir.
Okay, great. So if you do, just unmute yourself, turn your camera on so he's not talking to himself, so he can actually see who he's talking to, and just fire away.
I'm sorry, I was a little tardy to the meeting, so I missed a little bit of the beginning. But did you guys go over whether or not you use actual annuity leads, or do you get all these leads or your prospects from regular life business and final expense?
The majority of it, Jose, is everybody else. I've got a small, tiny portion, maybe 10 leads a month that are annuity, but 99% of them are all just like you would use or anybody else. And then as you're asking for the referrals and you're building a book of business, I literally will get 7 to 10 referrals a week that are solely referrals on the annuity side, because I've spent so much time just really trying to perfect that part of the craft.
A little bit of his residual building up, just following up with you. That's good.
Yeah.
Golden question.
Good deal. What other questions you guys have out there?
David, when you're sitting with a client who is standoffish or private about how much they have in savings, how do you handle that?
Ask that question one more time for me.
If you ask someone how much they have in savings, like, or where it is even, and they aren't very forthcoming with the information, how do you handle that?
If they don't answer it on the first question, I pretty much leave it alone right there, but then I'm still going to come back to it on the back end. And Leah, let's use you. Let's say you're the one that didn't answer. I'll just say, you know what? Hey, Leah, I don't have in my notes. Do you have something that acts like life insurance? And then I'll ask the golden question at that point in time. And I'll try to do, I'll actually soften up the discussion. Like, you guys aren't seeing me right now, but I do wear glasses, but I don't need it for the up close stuff. Some of you guys are probably a little younger than me, respectfully. God bless that you are. You got a lot more time to go do some really good things. So you might not remember who E.F. Hutton is, but E.F. Hutton back in the 80s, he had a commercial. When E.F. Hutton speaks, people listen. I've kind of translated that into the following. When I want to get really serious with somebody, I do three things actually. Number one, I lean in and get a little bit closer. Number two, I start to talk in a softer tone to force them to listen more intently to what I'm saying. Number three, I actually take off my glasses so they know that I'm absolutely putting myself into, this is a very important part of this conversation mode, and I want you to pay attention. So with you, Leah, if you didn't answer that question up front, sometimes people are funny because you just haven't built the relationship strong enough yet, but I'm always going to come back to it. Hey, Lee, you didn't give me these answers before, but I need to fill them out for my agency manager because he checks all my work. Do you have something that acts like life insurance in the event of your death? And I know you're young, that's great, but have you actually done anything like a 401k or an IRA or no?
Okay.
And I'll add in that little blip that says somebody's going to be checking my work. So now when I go back to the office, Leah doesn't know it, but she thinks that Wayne, my agency owner, is going to be looking at all my paperwork. And she's not really going to want me, if she's remotely human, to not have that box answered. So now she's going to give me the answer. I've got $5,000 in an IRA. Again, remember, I don't care what the number is. I just want to see if I can help you better protect it than where it's at. And the reps allow you to understand how to change the tonality and the inflection in your voice so that whether you're talking to Cameron or Eric or Renee or Carlos or Leah or Jose or Wayne or Ivan or anybody, you can let them know that this is really important by how loud or how soft or how close or how far or glasses on or glasses off that you are. I just want to check this box, Leah. I really don't want Wayne to check my work and see that I didn't get an answer for this. I know you're young, so you probably haven't saved a ton yet, but do you have anything that acts like life insurance? For example, a 401k or an IRA? I'm sort of boxing you into, you got to give me an answer. And then that creates your opportunity. Does that make sense, Leah?
Yeah.
Okay, good. Good.
Thanks.
You're very welcome.
I think to piggyback off of that, one of the other things that I do when I ask for the statement is tell them that I have a team of retirement specialists that are going to help me take a look at their statement, analyze it, and make sure that we put them in the best position possible to protect it, so that they're not looking at me as the end all be all that's going to be protecting it. They understand that I have a team of people, which consists of the David and Brad Allens, the AMS team, and the Danielle Burns, of people that I consult when I am putting together an annuity for myself or for you guys. So that might help alleviate a little bit of the anxiety, understanding that it's not just you, and making sure that they understand that it's not just you, especially when you're just starting out, because I still do it. But I'm going to mute back out and give them some time to answer a couple more questions.
Yeah, before the next question, I'm going to respond to that, Wayne, really quick. I didn't mention that before. On a lead appointment, I do actually mention all of that I'm going to take it back to the retirement team and make sure we dot our I's and cross your T's so we can bring you the best possible option. On a referral, you know, when you're getting a referral on the annuity side, they already know that you know. That's why you're getting that phone call from that person. So Leia's calling me because Jose's already edified that I did a great job for him. So she has every expectation that whether I have somebody looking at it or not, I'm going to be the guy to help. So I won't necessarily do it there, but I do exactly what Wayne mentioned, which is I'm going to take it back and have the team make sure that we're dotting our I's and crossing the T's, and that we come back with some really good options for you if there are any that are available. So that's a great point, Wayne. Thanks for bringing that up.
We'll just do one more question and then let David get back to his day. Anyone?
Sometimes I get into scenarios where in the house, somebody might not be. It turns into a scenario where it's like an equity protection, and I want to be able to give them the option for self insurance, like through an annuity or something. How do I go to that transition from there to there, kind of seamlessly, because it's not really involving the saving of something they already put away? Assuming that I asked the golden question, they don't have anything put away, I guess.
Okay, so they've got nothing put away. And what exactly are you trying to do right there, Jose? So I understand, so I can.
Like if they don't have any kind of 401k or IRA or significant savings, and I know they do make a substantial living, I guess, or they're not trying to give up what they have in savings there. How do I transition into like maybe a self-insurance kind of scenario?
That's a great question. It's interesting how that walks out, because what you need to do is actually challenge them to what they're planning on living on when they retire.
Just give that forward challenge, like just to try to draw the line if I'm wasting my time or not, right?
Yeah, exactly. So Jose, I mean, this is a lead appointment, right?
Mm-hmm.
Okay. So you don't know them from Adam. So you have no allegiance to them other than to try and find ways to help. So if you're that guy, Jose, how young are you? Age-wise?
I'm 41.
Okay, so you're 41. So you're probably going to want to stop working in about 20 or 25 years, right, Jose?
Exactly.
Okay. And you don't have anything saved. Now, what I know is with our safe money retirement plan and some of the options we have available to us, we are able to put things together that allow you to start saving now, which is going to be less expensive than if you try to start in 10 years, because it takes less money each month to get prepared for 20 or 25 years from now. Does that make sense?
Mm-hmm.
So respectfully, if you're not doing anything now, when it's affordable, how do you plan on getting prepared to stop working in 25 years if you wait till later when it's going to become even tougher every month to save? Have you thought about that, Jose? And I'm going to challenge that. See, you're already going like this because you've assumed the role, but guess what? Every single lead appointment is going to do the exact same thing. When you challenge them to that, they're going to say, oh, you know what? I haven't thought about that. Now you're looking at a couple options, because you can talk about IULs that have cash accumulation that convert to tax-free retirement plans that act just like Social Security down the road, but they never go on a tax return. You can talk about a multi-premium annuity through somebody like National Life Group, where they can start saving every single month. Now it comes down to, what are you thinking about? And let me take it back to the team and come back with some ideas and a couple options for you. Now you're going to come back to a Wayne or an Ivan or a David or a Brad, and hey, what are some things I can do for Charles so that in 20 years he's got something saved to at least get him on his way? Because you don't have statements, so now you're selling him on the, I need to start something. And by opening the conversation, you're generating the respect that they're going to let you back in the door, because they know you're going to go to work and come back with some options for them, and that's what you want. So you just have to play the licensed professional in the room. It's your job to let them know, hey, you're not doing everything you need to do right now. How are you planning on not working in 20 years if you're not saving today? Because if you wait 10 years, it's going to cost you 5 times what it costs you today to save the same amount of money for 20 years from now. Have you thought about that? And then you just have a normal conversation and get them to agree to a bam bam. And you come back to your team and you put some numbers together and go back and close it out. But you have to be the man in the room or the woman in the room to have that conversation. If you don't, you're doing a disservice to your client, and you're leaving money on the table for your own family. To me, that's not fair on both fronts. So you have to play the professional and ask that question. See, Wayne's over here going, yep, he's nodding. So I know Wayne probably does all the same thing, don't you, Wayne?
Some of them, but I enjoy these calls because I get to as you know, I get to continue to learn and develop while I'm listening to you pour into other people. So it's a win-win.
Yep.
Yeah. But I thoroughly appreciate you taking the time to jump on the call, and especially to answer the questions and go a little further specifically into some of the concerns of a few of the agents on the team. As always, any parting shots or words of wisdom that you can impart on the team, or marching orders as they walk away from this call, to implement or to be mindful of, I would greatly appreciate.
Yeah, absolutely, Wayne. First and foremost, guys, get your reps in on the annuity side. It's a part of the business that really is a game changer for your checkbook, for your savings account, for your own retirement, for all the families that you're going to help along the way. Those reps allow you to become stronger and better and more knowledgeable and more relaxed on your in-home. Don't be afraid to ask for help. If you don't know, just be honest. Hey, I don't know that question. Let me call somebody, and then call Wayne or call Ivan or call me or call anybody. Part of your training has to be understanding what you can and cannot do. You can talk about the concept of an annuity legally. You cannot talk about, well, you should buy, sell, or trade that stock, bond, or mutual fund, because you don't have a license for that. If you do that and something backfires, they're going to sue you, and your E&O is not going to cover it, and you're really going to be screwed. So just understand, if they ask you questions about what they should or shouldn't do with their account, you just got to say, look, I don't have a license for that. If I can get a statement, let me take a look at it and see if our safe money retirement system might have some options that can help better protect what you've already done. And completely hedge everything. And then go back and get some help. You can send it in to ask a specialist. You can take it to Wayne. You can take it to Ivan. They can refer you over to me or Brad or anybody else. And it's all about getting the reps and getting comfortable. The more comfortable you are on this side of the table, just like when you got your reps on the insurance side, the easier things get. The more relaxed you are, now it just becomes fun, because every objection that's going to come, you'll already have the reps, and you're going to know after 3 words, okay, I know exactly where Jose is going, and I'm prepared for that objection before he finishes giving it to me. So I let him finish, and then I just go on the attack. But it's about just understanding one thing. You're only there to help if they want you to help. If not, it's just time to move on. I'm not a WWE fan, but Goldberg, when he wrestled, he had a really nice phrase. Who's next? His answer was, you're next. Okay. I look at every client as, you're either with me or you're not. If you're not, that's okay. I'm moving on. Who's next on my list? I've got to go. See you later. It was a pleasure sitting down. I'm sorry I can't help. I got 10 more appointments. Now I've got 10 more appointments, whether it's an 8 a.m. or an 8 p.m. call. Okay. I don't care what time or day or night it is. I always have 10 more appointments, because I never want to look at my book. I want them to always know I'm busy. I'm licensed. I'm an expert. I'm busy. I only want to help. But if you don't want the help, that's great. Who's next on my list? I got to go.